Happy Thursday. How's it going, everybody? Welcome to Chart Request Live. We do this twice a week here on Stock Market TV. Every Tuesday, 1 o'clock, you'll get JC and Spencer. Every Thursday, 1 o'clock, you get me and Pat. What's going on, Patrick?
How you doing?
Doing all right, man. You ready for some live charting?
Yeah, before we get started though, you just texted me and you said I'm the longest I've been weekly calls in quite a while. So you want to talk about that?
What I actually said was, this is the longest I've been since Nam. Well,
That's right. You were pretty aggressively trading then. That was right before we peaked in must have been around mid-July, right?
It felt irresponsible the whole time, right? Because you know how the trip came together really fast for Sean and I.
Yeah, and you're in a different time zone.
Yeah, but I obviously had a full portfolio of long exposure, right? This is June.
Yeah, that was one of the funnest parts of the rally so far.
So we just went out there and I just kind of let it ride. And it felt irresponsible the whole time. And I guess it was, but it worked out because I probably would have taken profits too soon on a lot of those trades. But all jokes aside, but I guess the point I'm trying to make is I think these tops are failing, particularly for growth stocks. That's where my focus is. And I've spent the last 2 days, and I nibbled a little bit on Friday too, and I was probably way too early. But the last 2 days I've been gradually adding. And then this morning, I've used Micron and AMD as the two primary vehicles. I'm just looking for like a real quick move, right? Like we say from failed moves come fast moves. If you look at XLK right here, this is all I'm trading, right? I'm just trading a failure of this short-term top. These are the strongest stocks right now. If markets are going to find a tradable low, I think we could really rock it off of these levels. And the NASDAQ looks the same. And a lot of the components of these indexes look the same, right? So really just trading these failed tops, potential failed tops, and hoping that they're continuation patterns. And we'll know soon.
Yeah, I mean, I like that you led off with these bearish patterns failing, and anytime you have a bearish pattern failing, it tends to be followed by a pretty sharp reaction higher. And from the people I've talked to, Head and Shoulders, when they fail, that's one of the more bullish reactions you tend to get. And I always think that's funny because people see that as a failure of technical analysis when it's really like, no, we know how these patterns should work. And if they don't work that way, then that's information too, kind of, right?
You know, shoot me, but the way I was taught is that I'm supposed to interpret the data as it comes in and then react to it. And if God forbid that means changing my mind, it means it's the prudent thing to do, right? So for some reason, I think it's difficult for a lot of people to understand because a lot of these disciplines, and I'm not saying anything mean about fundamental analysis, but they're constantly reacting to new information, right? They have their models, they have their opinions, and then they become dogmatic about those opinions, and they don't get new data for maybe 3 months at a time if you're waiting for an earnings report or something like that. No, we're looking at the prices every day, and if the market suggests to us or indicates that we are wrong, then we change our minds because we should. And I think because our discipline is a bit different in that way, that actually is understandably tough for some people to wrap their heads around.
Right. No, that's a great point. Spoken like a true technical analyst. But anyway, you want to dive right into it? We got a ton of tickers to cover.
Yeah, man. Let's just do it.
Mm-hmm. Well, listen, since Wavy, shout out to Wavy, is in the chat, let's start off with his request that he emailed to us. And just a reminder, I don't know if you already said this at the top of the show or not, but if we don't get to your tickers today, be sure to email us at questions at stockmarketmedia.com, and we'll be sure to get to them next time. So Wavy requested TTT, triple T.
Nope.
Oh.
Next. Sorry, Wavy. I'm not going to do the levered vehicles. Definitely not like an inverse levered vehicle. So this is the ProShares Ultra Pro short 20-year treasury. What I want to look at the treasury? No, wait. What I will do is I will look at long-term treasuries for you, right? And if that's the vehicle that you want to use, I guess the lesson here is simply, if I'm trading options in DraftKings, I'm not looking at the DraftKings options contract that I'm trading. I'm not looking at that chart. to determine an entry and an exit. That is just a vehicle. I will look at the DraftKings chart, the common stock, right? Because that's the underlying, and then determine, okay, do I want to be long, short? Okay, do I want to play through options? Fine. Levered vehicles and these inverse ETFs are the same thing. You look at the underlying that they're holding, right? So in this case, it would be long-term treasury bonds. And then you determine your directional bias. And then if that is your vehicle of choice, in this case, ultra short, so probably 1 or 2 or 3x levered short treasury vehicle, if you want to go use that, fine. But you should make the decision about your directional bias based on the actual underlying.
That's a great point.
That okay?
Yeah.
So here's TLT. So I guess what Wave is saying is he is looking to short bonds here, right?
Yeah, if you want to go long TTT,
you're shorting TLT, right?
Yep.
Here's the thing. The moment or the time to short TLT, I mean, Pat, was this not like the cleanest trade on the books this year and everyone was afraid to take it? I didn't take it.
That's where I think, when you're looking for potential failed moves or anytime you see a breakout and you want to know whether it's going to fail or not, I don't think it's a bad thing to look at sentiment and try to gauge where the crowd's at. Is everyone expecting it to fail, or is everyone expecting the break down or break out? Are they expecting it to go in that direction?
Everyone was doubting that bonds could actually keep falling, and
people were foaming at the mouth to buy that breakdown.
What's that?
People were foaming at the mouth to buy that breakdown. They still are.
To buy it, not to sell it. Yes, right. You're absolutely right. In hindsight, I think it was so obvious. Hitting myself for not making this trade. 110.92 was the range, right? So let's just say $20, $20 was the range. You can project that $20 range to the downside. That would bring you from about 92 or 90 down to 70. So I would say yes, there's still room to go, right? In this short, how long it takes to get there and what that path looks like, I don't know. I would have wanted to be getting short bonds right on this breakdown late last month. Another way you could do this, just look at the yield. Look at the 30-year, right?
That's a good point.
Yeah, just
look at the bond itself.
Still in this follow-through phase, right? That's following the breakout of this range. It will at some point cool off, and then I'm targeting based on just this range right here. If you measure this out in both the 10 and 30, it gets you around like 5.5, right? So what I'm looking for is a move by year end, right? That gets us right around here. We're about halfway there. And I think eventually you'll see something like this, right? Where you'll get a nice little short-term continuation pattern and a little coil here, right? And then, eventually we reverse higher and this rocks out with this coil. But I think you want to be patient here, right? Because you already got a big range resolution, some nice follow through. And at some point, this does have to kind of correct or digest these gains.
Yeah, I'm curious though with this one, where's the fib? Where's the 1618?
So I'm not going to fib a chart of interest rates.
Why is that?
Because I'm looking at a percent.
Oh, right. Okay.
I would be percenting a percent, which
so
use the measured moves. Yeah.
Let's look at one that was a leader in the first half of the year, but's cooled off lately. LVMH, one of these European luxuries. Yeah,
I mean, these stocks were all the rage. Right? These
yeah.
Am I looking at the right? Yeah, so this is the over the counter LVMHF. Am I doing this right, Pat?
I think so, yeah. Try that one.
I could have sworn.
Here,
Yeah, okay, so that's it, I guess. We're looking at the this is traded on the pink sheets here. It's the biggest stock in France.
Yeah, mine I do 1MC.
1MC.
Yeah, let's change the interval. And that's the one.
Then that's on the Milano exchange. So
yeah.
Either way, all right, they look similar. You'll get the idea. These charts look almost identical.
Yeah.
I'm gonna flip to a line. We are looking at the one. This is traded over in Italy.
You got a potential shake and bake going on. Your favorite.
Yeah, it's got to be, right? Otherwise, nasty top. So you had the range resolution here back in earlier this year, and now you got a big top here.
Yeah, it broke out pretty much in at the start of the year in January.
Yeah. So if I bring in the RSI, don't love to see it oversold, right? Don't love that. A little oversold here. But it's your point, Pat. You do have a little something there, right?
Yeah.
What do you think about this? I've been doing this lately.
Trend lines on the RSI. You know what? I don't think it's crazy. You're looking for a breakout, like a range breakout, new high. That's telling you something. I think it's valid.
It's the same thing as any trend line.
Yeah.
Like the rate of change is changing.
Changing.
Right?
Yeah, it's accelerating. Yeah.
So yeah, whatever. So LVMH trying to tick up a little bit here. You got to get back above these pivot highs, call it like 745. And then if we were to look at the pink sheets ticker, that would be LVMHF. I don't know how liquid this is. Something you would definitely want to check with something like this. Yeah, a little bit more work to do. The top is a little bit cleaner though here.
Yeah.
If you're trading this here in the US over the counter, you got the base, we broke out, and then some big top, and we broke lower back into this old range.
And look at this one. This one doesn't have the Momo divergence.
So you don't have that momentum divergence there. And really, you're almost 100 points away, 75 points away from triggering an entry. So this one looks stuck back in its old range for now. And what does that say for France? Can we just do that? Because there has been some serious deterioration overseas, right? So this is the iShares MSCI France index.
Well, LVMH is Italy, right? No,
no,
no, you're right.
So it ran right back into these old highs, just like so many of the strongest groups, right? Home builders, semiconductors, tech, runs right back into those old highs, and then prints some big old top here and breaks lower. So just like so many international indexes right now, France is really on the ropes, trading at its lowest levels in January.
Yeah. And you know what's funny about the LVMH thing is there were a lot of European luxury ETFs that came to market right before or during those peaks. There was a lot of demand for those. That group was doing really well, and there wasn't really a good way for US investors to get exposure. And when there finally was, what happens? So let's move on. And if you guys are just joining us, be sure to drop some more tickers in there, and we'll do our best to get to them. PJ in the chat wants to see JBL. And I know we got a few more to the email to get to, but I want to get to some of the ones.
I'm going to go fast, Pat. Let's go fast. I tweeted about JBL last night because I'm just so tired of seeing the stock on the new highs list.
You're tired of it.
I don't know if they just cured cancer or what's going on. So I do know a little bit. They make those grocery store robots, among plenty of other things. It's like an industrial robotics situation. So they're probably on the cutting edge of something really cool. It's typically what you see with stuff like this.
What grocery store robots are you talking about?
The only reason I know this is because I found there was a robot walking around my grocery store one day a couple years ago. So I looked it up, I took a picture of it, and I went to Google and I figured out who made the robot, and it was Jabil. So look, with something like
grocery store robots.
Yeah, with something like this, it's just like, where do you get in, right? So if I fib it from the 2022 base, kind of right in the middle of the range, right? We're just looking for an entry. If I zoom way out on something like this, let me get rid of all that. Look at the monster base here. D1 Tom Bruni tweeting about this base on Twitter last night.
Oh man. Those really long, like decade-long bases, those can be tough because you often get like a bunch of failed attempts before they actually go. But when they do finally go, they can last for years.
You get whipped around. And when you zoom out on the chart, you don't see that. All the shaking, right? When you zoom in and look for an entry, a lot of these things, Pat, can look absolutely crazy. So I guess patience is the takeaway when you see a chart like this. This goes all the way back to the .com bubble highs, but it does give us a nice level, right? So with something like this, I don't want lines on my chart that we don't need, so move those. Eyes don't focus on the wrong thing here. Look, target one hit around 110. We're already 20 points away, and the next one's 175. So I would say weakness back towards 110, or these pivot highs, which are right around 115. Right? These pivot highs right here. But now there's no imminent level that's giving us a great entry here. But this is like such a strong stock. So you do want to keep it on your radar.
Yeah. All right, let's move to a REIT now. You ready? BN.
So you can't own these stocks unless you have a mandate, unless you're a fund manager and you have to own some sort of exposure to these bond proxy groups. The situation is very simple. The risk-free rate is about 5%. These stocks might pay you 3.5%, right? If you're lucky, but they come with a tremendous amount of risk and little to no growth, at least in this environment. You're talking about a commercial real estate company. Can you find a good REIT that might be in the right places, right? Doing business in the right spots? Yeah, fine. But as a group, you can't buy these stocks. And this one looks like one of those that you don't want to own, right? So, for example, Brookfield Corporation, they got a juicy yield. And Brookfield's good. They're a great company. They have a bunch of different public vehicles. Yeah, this thing's paying you 1%.
Yeah.
The situation is here. How is it so low?
50.
Right,
yeah.
so you only get
$50.
1% here. You can get 5% in the bond market. It's tough to own these names. No, there's nothing for me here. You got the pivot lows coming into play, a shelf of potential support right at current prices from 30 down to about 28.50.
Now, if rates reverse lower, do you think this one gets going? Gets a nice bounce at least then?
Not initially.
Oh.
Right, because rates can stop going higher, but they need to go back down to like 3%.
There's a threshold, you're saying.
Right, like these stocks should continue to get re-rated until their yields are competitive with treasuries.
Right. And that's a good point. Like, yeah, you saw a little bit of a bounce, but it was still in a downtrend, making lower highs while yields were kind of basing second half of last year, early on this
Really
year.
ugly chart.
Yeah.
What's
So
next?
let's move on to BPH.
BPH?
BPH.
Energy?
Oh,
This is not a ticker.
yeah, looks like ASX.
There is no BPH traded in the United States.
Let's move on to Lilly. You want to touch on that one?
I think that these weight loss drugs are a real tragedy, and they're a big mess, and I'm tired of hearing about them in the news every single day. Today it was Walmart saying people are buying less groceries because they're on Ozempic. And I know that's Novo Nordisk, but I think they each have one of these weight loss drugs. That's why their charts look so good. Another thing that came out about that Ozempic today, Pat, was that it causes stomach paralysis. I don't know what that is, but it doesn't sound like something I would ever want.
Man.
I think these drugs probably eventually get banned. So it worries me that these biotechs or these pharma companies that manufacture and sell these drugs have run so much. I mean, sure, they can't give that money back once they get banned, but I don't think that this is sustainable. These drugs are no good. So Novo
Nordisk take.
Great uptrend, similar to Lilly. They're the ones who own Ozempic. I don't know what the one Lilly owns is. I'm sure somebody will drop it in the chat. But I think this uptrend is tired. Listen, this thing's hit like 4 or 5 price targets for us over the past few years. So if you haven't already made money on this stock, I think, listen, not one to really leave a trend early for no good reason, but I think the easier money has been made. Look at this thing from 50 something, 60 something to just about 600 here earlier this year. Whoa. So, we could look for different spots to fib it out in. Most recent little correction earlier this year, if we fib that, I can give you a level or two.
Yeah, almost reminds me of that ticker PJ brought up, JBL, and how once the breakout gets going, it's really hard to find a spot that gives you good risk and reward to get in.
Tough one. It's going to trade on the news. I don't know.
All right, let's move on to Nick's ticker, Nick Tomas. Said thoughts on FRO.
Yeah, frontline.
What's that, like the pet medicine?
No,
Oh, okay.
oil and gas, midstream.
Oh, there we go.
Right, it looks like one of those. Oh, Pat, I bought my first LP today in probably 10 years. I made myself a
Healthcare.
rule. I made myself a rule during the last commodity cycle that I would never buy anything that would deliver me a K1 for tax purposes at the end of the year. Like that's a rule, and I followed
What's
it.
I'm
Look,
not an accountant like you. What is the K1? What is
K1 is it's a partnership tax document, right? That the company will send to the investor, and you'll have to like do extra work on your taxes. And there's all these weird boxes about like this kind of gain, that kind of gain, like an exempt gain, not non-deductible, non-taxable, this and that. And you'll have to like call their accounting department and be like, what is going on here? How do I do my taxes? Right? It's a big mess, and that's why so many companies have shifted away from that organization model,
I
right?
see.
The LP model. You saw like the asset managers switch. A lot of the MLPs have tried to switch. Any company that really could switch has gotten away from the LP model and become a corporation. I bought ARLP.
ARLP, yeah.
You know what
That's
the
a
yield is on
MLP,
this?
right?
You know what the yield is here?
That's an MLP, right?
Coal,
Oh, right. Oh, right.
13% yield.
You got to be kidding me.
13% yield.
But you are like the preacher of these dividend traps. Is that not a dividend trap?
Here's the thing. They're doing great. Coal prices keep rising. They can service that dividend, right? A lot of times they are traps, but I looked into this as
And
what I
are they looking to explore? Are they looking to explore new mines? Like,
nope.
okay.
Mm-mm. They're not as crazy as some of the like the arch coals and stuff like that. They're more or less just moving the coal around. But it's a monster yield. So we'll see. I might end up regretting it, but this frontline had me thinking of that because frontline is a midstream operator in the energy or the oil and gas space. It is up over 7% here today. And look, you have a really clean level. I don't hate this. Again, Pat, you're right.
Yeah,
Being a
very
hypocrite.
clear level.
I usually say you can't buy these stocks. K1s are a pain in the neck, but I think you can make the same argument for the oil and gas MLPs that I just made for myself to buy ARLP. We zoom out. Yeah, big old base here. Big old base. What are they paying us to hold this?
Uh,
Is that real? I don't know. We'll have to look into that. It says
oh
20.
no, almost a 20% yield.
That's crazy. We'll go.
That's not right. Is that right?
Dude, it could be. It really could be. Whether it will be 20% this time next year is the question always. But look, big base shaping up here could draw this in a number of different ways. But the essence of this pattern is very much a reversal. And that's really what matters here. Boom. I don't know. What do you think? We're climbing up the right-hand side of
Yeah.
this base.
And it looks like accumulation for sure.
You get long
Time frames.
these pivot highs at 19, maybe, man, you get a double, trade it back to 38, those highs from 2013. Yeah, I'm fine with these stocks right now. Midstream is hot. The refiners are hot.
So Straza, we got a couple questions for you. You ready
the
for them?
refiners really came off recently.
You ready for them?
Questions?
All right, Nasdaq Poppy is asking Straza, if you look at the weekly and monthly charts of S&P, am I crazy or not? Looking good at all for the next quarter. I'm becoming more bearish looking at that. And the next questions from PJ, are fib levels appropriate for something like the stocks above the 100-day moving average?
One at a time. We'll get
So let's start with that second one. Are fibs appropriate for something like SPX A100R? So like the, that ticker on stock charts, the percent
of the ADR one?
What's that?
Is that the ADR fund?
No, it's the percentage of stocks above the 100-day moving average.
Oh, like, is he asking, do you want to fib that indicator?
Could you? Yeah.
I wouldn't, right? Because the reason we really use Fibonacci's most of the time are for the extensions, and that's when we're in uncharted territory. something like the percentage of stocks above any moving average or whatever that is will never be an uncharted territory because it's actually an oscillator. It's going to oscillate from 0 to 100. So I would never fib an oscillator. No. We just talked about drawing trend lines on them. You could do that. You can compare them to, their price memory.
Points. Yeah.
Yeah. Or past pivot point, pivot highs, pivot lows. Sure. But
For
you don't.
example, my threshold for the 200-day percentage of stocks over the 200 days is around 50. If it's below 50, the market's kind of unhealthy. Yep. If it's above, okay, we're in the clear, kind of.
Yeah, we had David Cox on today, and he was talking about, listen, everybody has their own thing. He has something that defined whether or not an uptrend was in place using just like a 200-day moving average and whether the 150 is above it, type of a crossover system, right? And he said 30% tends to be a big level for this indicator, right? So that's how he's looking at it. You're like, when this crosses 30 or touches back to 30, I pay attention, but it's only going to move from 0 to 100, so you don't need to draw retracements on it.
All right. So why don't we check out one or two more? We got to wrap it up here, right?
What about the S&P 500 weekly and monthly chart? And this is totally fine to just ask questions like this, right? They could be.
Yeah, I think this is great. Yeah.
So he's worrying when he looks at the weekly chart?
Yes, weekly and monthly. Am I crazy or not? Or is it not looking good?
Listen, we're going on five consecutive down weeks, right? At the S&P 500 index level. Never good. When we look at the monthly, there's some stuff that wasn't great this week or this month, but not the end of the world, right? And you never want to look at just one index like in a tunnel. Look at the NASDAQ, look at the Dow, look at the Russell 2000. You're not going to see much better stuff if you're looking at the Russell or the Dow. But, we got a trend line break here and something like the NASDAQ. But no, it's not the end of the world. It needs to stop soon, I think, right? If we're still talking about consecutive red weeks, a few weeks from now, I'll probably be saying something different. But I think this is still very much recoverable and would fall into the category of garden variety corrective action.
All right. You got time for one more or should we leave it?
Mm-hmm.
All right. Let's check out AbbVie real quick. This is from Bien Cruz. I hope I pronounced that right.
AbbVie's a great business.
And thank you guys for all these great questions. This is good.
AbbVie is just really like this stock. It's always been good. Pays you 4% yield. Quality stuff. Low volatility. Broke out of this base.
I don't have a weight loss drug, though.
I like them even more for that. Listen, I'm not a fan of these weight loss drugs. I think.
Oh, we know.
So nice base breakout and then straight into big old consolidation, right? Since early 2022. And I think that you can try to pick a spot or pick an entry here in a number of different ways. One quick way to do it would be anchor VWAP from the all-time highs. Look at you now, right there, right? A couple points away, around 150. You can draw a trend line like we have drawn here. Let's look at the daily, zoom in a little bit. Right, kind of want to see it break trend a little bit. You can use these pivot highs.
Draw a horizontal.
Right, use this shelf of, price memory from late last year, early this year. So a number of different ways to do it. The point is, this is simply a sideways pattern or a consolidation within the context of a strong structural uptrend, right, and a structural pattern breakout. So I think similar to what we're saying about a lot of these charts is just look for a logical level to get in. I gave you a couple of different options, depending on how aggressive you want to be, right? If you want to be aggressive and enter as quickly as possible, use the VWAP. If you want to be a little bit less aggressive, you can jump it using the diagonal downtrend line. If you really want to wait for some solid confirmation, use these pivot highs around 165, right? So
yeah.
And there's nothing wrong. There's nothing wrong with layering into the trade, right? Scaling in. Nothing wrong with buying a third at each level.
Well, that's also a good point. So we got one more I'd like to get to if you have time. NEE. And this comes from
what goes up. I'm going to say the same thing.
Come down.
Right. Listen, I'm going to say the same thing about real estate stocks. Gosh, I've seen so many charts of this thing over the past 2 weeks now.
And just to give you guys some context here, this was one of the ones driving the weakness that we saw early in the week on utility stocks. we talked about how those bond-like sectors are just getting taken to the woodshed, especially recently. And you can't own them until yields show some meaningful breakdown reversal.
Been driving the strength for years in the utilities index.
Utilities.
Xterra is like the one that everybody wants to own. They own Florida Power and Light, so I always have to hear about them down here where I live. I'm a customer. So getting absolutely blown out of the water right now. This is the best name in utilities. Boy, look out. But again, it's just a repricing. Same thing that I said about real estate, right? You can draw trend lines. If you draw it from the 90s, we're okay. If you draw an extended trend line from the financial crisis, though, you're getting a little bit of a break here, getting a little bit of a change in character. But as bad as Nextera has been, it doesn't look all that different from other utilities. The utilities index in general, these stocks are getting re-rated for a higher interest rate environment.
I like that word, re-rated. That's a good way to think about it. You could say they're pricing it in, but re-rated kind of sounds like they were thought of as one thing, perceptions changed, and now the market has to all of a sudden get used to that and price that in.
Here's what it is, Pat. Just like growth stocks and tech stocks in 2021 and 2022, right, when they appeared to get on board with the fact that rates were going to be rising and maybe stay higher for longer, you might be willing to pay 25 times for utility stocks when interest rates are at 0 or 1 or 2%. But when the risk-free rate is 5% and this dividend stock is going to pay you 3 or 3.5, you're not going to pay 25 times earnings anymore.
So you brought that up earlier in the week in maybe Spaces or on the morning show, but I thought that was a great point. I had no idea. I mean, I don't look at PEs at all. I probably never will, but I didn't know that these are so much more expensive on a PE basis than things like, what did you say, than tech even?
Dude, Staples stocks are trading at like 25 times earnings. Large cap Staples sector
So
spider.
what is tech or communications?
Apple is trading at 25 times earnings. It's not right. They have gotten these hefty valuations, right? That historically they wouldn't have, depending on where the bond market is.
Wow.
But simply for the fact that that's where people went for yield. They went to these bond proxy groups. Investors don't have to do that anymore. They just go to the treasury market. They're much better off.
Yeah.
So that's it. And where it stops, how far it goes, we don't know, but they're still very expensive. And I still think even at these prices, there's really no sound investment thesis for owning these or real estate stocks or a lot of staples names, right? So you got to be really, really picky when you're looking through these defensive groups these days.
Yeah, I think that's a great point you made. Great point. And H-Chan, to answer your question, Tom Bruni, our old friend Tom Bruni, his handle is Bruni Charting, right? At Bruni Charting.
Yeah, and go follow him. He just started tweeting again.
It's good to see him back in the saddle.
Yeah. All right, Pat.
Right. We'll wrap it up. I'm going to write down some of these tickers we didn't get to: VLO, PSX. We'll try to get to them, or JC will get to them on Tuesday. Strauss, you want to sign us off?
Yeah, if these tops are really going to reverse here, they're going to reverse now, right? I want to see tech go and close green today, right? I want to see a big intraday reversal. I want to see follow through tomorrow. This should happen right now. The longer that it doesn't happen, the less likely it is to happen, and maybe they are actually valid tops, right? So I think, just like I said last week, I'll say it again this week. Next few days, the way we close tomorrow, very, very important. Keep an eye on these short-term patterns. Are they reversals? Are they continuations? We just don't know yet. I'm getting very long. We'll see if I'm right. I'll be thrilled when we come on here next week. But that's it. Tune in tomorrow morning, 8:30, just like every morning. The best show in finance, or the best morning show in finance. The morning show, me, JC, and Spencer will be on like we are every morning on Stock Market TV. Thanks, everybody, for joining. Thank you, Pat.
Yeah, of course. Great questions, too. I'll see you next week.
Peace.
Bye.
Everything is gone.